Hello everyone and good morning. This is Rachel live from 𝐊𝐴𝐴 Studios and you're watching The Early Trades, a show where we share with you a glimpse of the Australian share market at the open, along with global and domestic drivers triggering market momentum. We also take a look at prominent newsmakers grabbing the headlines during the early trading hours, as well as movements seen in crypto, crude oil, gold and the metals indices. Now, Australian shares opened in the red this morning despite global markets closing at record highs overnight as investors look beyond weak economic data. The markets were upbeat despite Asia's factory activity remaining weak last month and US private employers hiring far fewer workers than expected in August due to a rise in coronavirus cases. Many market participants expect central bank stimulus measures to continue. Meanwhile, the ASX 200 dropped 61.8 points or 0.82% to 7,465.3 during opening trade this morning after falling 0.1% to 7,527.1 points on Wednesday. The domestic miners may fall on weak iron ore prices while tech stocks are likely to gain, tracking cues from the Nasdaq. On Wall Street, the Dow Jones fell 0.15%. The S&P 500 traded flat and the Nasdaq rose 0.3%. Technology, real estate and utility stocks were the top movers on the S&P 500, whereas energy and basic material stocks were the laggards. With 7 out of the 11 index segments in the green, BHP shares will be under pressure today due to shares trading ex-dividend for the fully franked final dividend. Other shares going ex-dividend include CSL, InvoCare, NIB Holdings and Woolworths. Moving on now, let's quickly take a look at the highlights of the prominent ASX stocks under the spotlight during the early trading hours. First company on our list is the Flight Centre Travel Group. The travel retailing companies entered a joint venture with Tokyo-based NSF Engagement Corporation to expand its corporate travel business in Japan. Moving on, an independent Australian oil and gas company, Senex Energy, has signed a gas sales agreement with Opal, under which it will supply Opal with natural gas for up to 6 years. The agreement has broadened the scope of the company's supply of natural gas. Meanwhile, computer memory technology company Weebit Nano has requested the ASX for a voluntary suspension of its shares until the 9th of September. That's on the back of a pending corporate announcement. Details of the announcement are yet to be declared. Looking at bond yields now, after falling due to weaker than expected August private payrolls, US Treasury yields held their ground on Wednesday. The benchmark 10-year yield was last unchanged at 1.302%. On the other hand, in the currency space, the dollar traded near its lowest point in almost 3 weeks versus major peers. The dollar index fell 0.14% to 92.52. The dollar eased over concerns about slowing growth, but world stock markets scaled new highs on Wednesday, with investors looking beyond weak economic data to focus on a likely continuation of massive central bank stimulus measures. Moving on to crude oil prices now, they inched lower. That was after OPEC stuck to its current plan of gradual hikes in output. Brent crude fell to $71.59 a barrel, while WTI crude rose $68.59 a barrel. Energy stocks such as Woodside Petroleum were in the red during early trading hours, whereas Santos shares edged higher during early trade this morning. Looking at the futures and commodity space, gold traded within a narrow range on Wednesday following the release of key US economic data. Spot gold was down 0.1% at $1,812.55 an ounce. US gold futures ended 0.1% lower at $1,816 an ounce. Leading ASX listed gold stocks such as Northern Star Resources were in the red during early trading hours. Looking to the metal space, Chinese iron ore futures fell over 8% on Wednesday, pulled down by a sluggish spot market. Benchmark iron ore futures on the Dalian Commodity Exchange for January delivery closed 7.8% lower at 765 yuan. That's all for the early morning trades. This is Rachel signing off, but stay tuned to 𝐊𝐴𝐴 TV as we have many more shows lined up for you, sharing live updates across the economy, markets and sectors.